All right, good morning. It is Monday, February the 16th, 2026. Happy President's Day is today, so we hope everyone had a nice weekend. President's Day, of course, so stock market's closed today, banks are closed, my kids' school's closed, but we've got some work to do in here. So Oceanside is not closed, but I hope you've been enjoying the Winter Olympics. All right, so I know for our family, we don't watch a lot of TV in our house, but I feel like the Winter Olympics, we kind of make a little bit of an exception. So it's been really fun watching, hockey, of course. I might be the only one that actually enjoys watching hockey in our family, but the kids are into kind of watching the curling and bobsledding. Yeah, my kids didn't know what bobsledding was, so I guess when you're raising kids in the South, just some things I guess I shouldn't take for granted. So but bobsledding, because of that, of course, now we've watched Cool Runnings. I think we've watched 3 times in the last week now. New favorite for the kids. I think that's quite funny. But we hope you had a wonderful weekend. Kicking off reviews today, so really excited. All right, after my close to 15-minute rant last Monday's video on the difference between growth stocks and value stocks, we're going to keep this one much shorter today. As again, when we start reviews here, we start our first appointment at 8 a.m. Eastern, so I get in here in the morning, and videos will be a little shorter here in the weeks ahead, unless there's like a major development that I feel like we should dig into in a little bit more detail. But last week in markets, mostly positive economic data. Most importantly, in my opinion, you saw the inflation number come out lower than expected. All right, so 2.4% year over year. The change month over month was only 0.2%, which is a great number. The jobs number came in a little bit better than expected as well, which was maybe a little bit of a surprise. Retail sales, a little disappointing on that front, but not terribly surprising, just given how robust the run in 2025 has been. Also had some housing data that was not great as well. All right, so on that, particularly like those last two, retail sales and the housing data, probably the big reason why you saw bonds have their best week in a while. All right, so you saw yields come down. All right, so the 10-year U.S. Treasury, which really is the starting point in where mortgages begin to be priced on most mortgage vehicles. So you saw the yield there go from north of 4.2 this morning down to 4.04 on my screen. So a nice drop in yield. So the week ahead here, you would expect mortgage rates to be lower here in the week ahead. And then from a fixed income, from a bond perspective, remember, as rates come down, bond prices increase, right? So that's why you had the nice gain in bonds last week. U.S. stocks last week were lower by about 1%. The NASDAQ was hit a little bit harder than that. All right, so again, not to go into last week again, but more that growth pocket of the market beaten down a touch more, about 2% last week. International stocks were higher last week. Again, so we touched on this a lot in 2025, and again, it's carried through into the beginning of 2026 here. But international stocks higher by 2% last week, where U.S. equity markets a bit lower. So we'll see the way it plays out. Again, reviews start this week, so we are really excited to see many of you kind of learn about the plans you have ahead here for the spring and summer months. So. We hope you have a great week. Questions, comments, concerns, please don't hesitate to reach out to our team, and we'll talk to you soon. Thank you.